Hey everyone, welcome back to Corporate Decoder, the place where we dig into the nitty-gritty of big companies and try to make sense of all the jargon. Today we're peeling back the curtain on what Intel Corporation has been up to with their latest annual report. Now buckle up because this report dives into some pretty serious financial moves, some big risks, and a whole lot of numbers that tell a fascinating story about Intel's journey. And hey, if you appreciate getting straight insights from these corporate documents, make sure you are subscribed. And we've got a Discord community linked in the description below where you can chat with us and other corporate decoding enthusiasts. Intel Corporation, a name synonymous with computer chips, has just dropped their annual report, and let me tell you, it is a doozy. For year ending the 27th of December 2025, Intel is giving us a real look under the hood. We're talking about billions of dollars in revenue, quite a bit of debt, and some major strategic shifts that could really shape their future. So stick around as we decode Intel's financial health and their bold plans for what is next. Alright, let's jump straight into the numbers for the year ending the 27th of December 2025. Intel's net revenue was a massive $52.853 billion. That's huge, but it's a slight dip from the $53.101 billion they pulled in during 2024. Now, while that might sound like a small drop, it's important to remember this is a company operating on a global scale, and even small percentages involve enormous amounts of money. When we look at what it costs to make those chips, their cost of sales for 2025 was $34.478 billion. This means about 65.2% of every dollar they brought in went into making their products. This is a significant chunk, and looking back at 2024, it was even higher at 67.3%, so at least there is some improvement there. This brings us to their gross profit, which was $18.375 billion in 2025. That is 34.8% of their revenue. This is a pretty healthy number for a manufacturing business, and it is actually up from 32.7% in 2024. So despite the slight drop in overall revenue, they managed to improve their profitability on each dollar sold, which is a good sign. Now, Intel is known for its innovation, so it's no surprise they pour a ton into research and development. In 2025, they spent a whopping $13.774 billion on R&D. That's 26.1% of their revenue. That's a lot of money going into creating the next generation of chips and technologies. Looking back at 2024, they invested even more at $16.546 billion. So they are managing to spend less on R&D while still pushing forward, which aligns with their strategy to be more financially disciplined. They also spent $4.624 billion on marketing, general, and administrative costs, which is 8.7% of their revenue. This is down from 10.4% in 2024 and 2023. This reduction in spending here, along with the R&D cuts, shows they are serious about cutting costs across the board, which is a big theme in their strategy. And speaking of cost cutting, they had a massive $2.191 billion in restructuring and other charges in 2025. This is a big number reflecting their ongoing efforts to reshape the company and cut expenses. In 2024, this number was even larger at $6.970 billion, so while restructuring is still happening, it seems to be ramping down from the peak. All these factors combined led to an operating income for 2025 of a negative $2.214 billion. Yes, you heard that right, they had an operating loss. This is a significant improvement from the operating loss of $11.678 billion in 2024, but it is still a loss. The large restructuring charges and increased R&D spending are definitely weighing on the bottom line right now. However, there is a bright spot here. They had gains on equity investments of $514 million in 2025. This suggests they have some smart investments outside of their core chip business that are paying off. And here is a big one. Interest and other income net was a massive $3.257 billion in 2025. This is largely thanks to a huge gain from selling 51% of their Altera business for $5.6 billion. So while their core operations had a tough year, they managed to make a lot of money from selling off parts of the company, which is a strategy they are actively pursuing. When you put it all together, they had an income before taxes of $1.557 billion in 2025. This marks a significant turnaround from the $11.210 billion loss in 2024. The main driver here is that gain from selling Altera. Now for taxes, things get a bit complex. Their effective tax rate for 2025 was a very high 98.3%. This is largely due to how they account for a change in evaluation allowance against US deferred tax assets. It's a bit of accounting jargon, but it basically means they're being super conservative about how much they can expect to save on taxes in the future. And finally, the net income for 2025, Intel reported a net income of just $26 million. That's right, after a huge loss in 2024 of $19.233 billion. They are now making a tiny profit. This is almost entirely due to that Altera sale and other financial maneuvers. What matters to shareholders, though, is the net income attributable to Intel itself, which was a loss of $267 million. So while the company as a whole made a small profit, the portion attributable to Intel shareholders was slightly negative. This really hammers home how much that Altera sale propped up the overall numbers for the year. Now look at this. In 2025, they had 4.530 billion shares outstanding on average. This is up from 4.280 billion in 2024. This increase is largely due to issuing shares to the US government as part of a deal related to their CHIPS Act funding, which is quite a development. This means there are more shares out there for the same amount of company profit, potentially diluting existing shareholders' value. Let's switch gears to cash flow, which is crucial for any business. In 2025, Intel generated $9.697 billion in cash from its operating activities. This is a good increase from $8.288 billion in 2024, showing that despite some tough numbers on paper, they are still generating solid cash from their day-to-day business. However, and this is a big however, they spent a massive $11.204 billion on property, plant, and equipment. That's more than they brought in from operations. This shows Intel is still investing heavily in its future building and upgrading factories. This leads to an adjusted free cash flow of a negative $1.612 billion in 2025. This means after accounting for those big capital expenditures, they are not generating positive free cash flow right now. This is a stark contrast to the positive cash flow in previous years and highlights the strain of their massive investments. On the balance sheet, Intel ended 2025 with a very healthy $37.416 billion in total cash and short-term investments. This is up significantly from $22.062 billion in 2024. This cash pile is vital for funding those huge capital expenditures and navigating periods of negative free cash flow. But they also have a lot of debt, a total of $46.585 billion. While it is down from $50.011 billion in 2024, it is still a substantial amount. They are a heavily indebted company, and managing that debt is going to be a constant balancing act. Intel is definitely going through a major transformation. They've got a 2025 restructuring plan to simplify how they operate and cut costs. This includes reducing their workforce by about 15% by the end of 2025. They also took big non-cash charges related to manufacturing assets they determined would no longer be needed. This is a clear indication they are streamlining operations and focusing on what they believe are the most profitable areas, leaving behind less essential parts of the business. Now let's talk about risks, because Intel faces a lot. They are in a highly competitive industry where technology changes lightning fast. Competitors like AMD and Nvidia, and even big cloud companies designing their own chips, are providing serious challenges. Their Foundry business, which is supposed to be a future growth engine, is still very new, and they are up against giants like TSMC who have been doing this successfully for years. A big risk they highlight is that if they can't find a major customer for their Intel 14 semiconductor manufacturing process, they might have to pause or even stop developing that technology. This would mean relying even more on third-party foundries and could lead to big losses on their factory investments and potentially losing government incentives. One specific area of focus is their Mobileye business, which makes driving assistance and self-driving solutions. They have a significant amount of goodwill tied to this unit, around $8.2 billion. While they didn't record an impairment charge for it this year, they note that a slight increase in their discount rate could lead to an $871 million impairment. This means that even though Mobileye is valuable, its value is highly sensitive to future projections and economic conditions. Intel also has a long-standing legal battle with the European Commission regarding competition practices from way back in 2009. While they won some parts of the case, the EC imposed another sizable fine of about $401 million in 2023. Intel appealed and the fine was reduced, but it's still a significant legal overhang. They've also been dealing with patent lawsuits and security vulnerability issues that have led to significant judgments and settlements over the years. These legal battles are costly and can drag on for years. The VLSI litigation is a prime example. This case involves billions of dollars in patent infringement claims and jury awards. Intel is fighting hard on multiple fronts, and while they've had some wins, the situation is still very much active and uncertain. They've already accrued about $1 billion related to this litigation, and that number could still go up. Looking at leadership changes, their CEO Lip Bhutan took the helm in March 2025. They also have Nagachandra C. Karan as Chief Technology and Operations Officer and General Manager of Intel Foundry. These leadership changes are part of their broader strategy to become a more engineering-focused and customer-centric company. However, the company also saw some significant headcount reductions as part of their restructuring plans, which can impact morale and talent retention. So what is the big picture for Intel? They are clearly in a massive turnaround effort. Their strategy revolves around transforming their culture, revitalizing the x86 ecosystem, growing their external Foundry business, and expanding market opportunities. The financial numbers for 2025 show the pain of this transformation with operating losses and negative free cash flow. But the significant cash reserves and the substantial progress in improving their gross profit margins and reducing operating expenses suggest they are laying the groundwork for a comeback. The biggest risks are intense competition from nimble rivals and the immense capital required for leading-edge chip manufacturing. Their reliance on government funding and alternative financing deals also carries uncertainty. However, the massive investments in AI-related products and their Foundry ambitions present huge opportunities if they can execute effectively. The US government's increased stake in the company is a significant development with both potential benefits and substantial risks related to governance and future strategic decisions. Intel is betting big on its ability to reclaim its technological leadership and become a dominant player in the Foundry market. It is a high-stakes game with massive investments and a lot of uncertainty. The Altera sale and the US government bringing in billions in exchange for shares show they are making bold moves to fund this transformation. While 2025 was a year of significant restructuring and investment with a net loss attributable to shareholders, the underlying cash generation from operations and the strategic divestitures provide some stability. The path ahead will be challenging, but their commitment to innovation and manufacturing leadership remains paramount. Alright, that is our breakdown of Intel's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think their big bets on AI and Foundry will pay off, or are the risks too high? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the world of corporate finance. Don't forget to check out the Discord server linked in the description where we can continue this conversation. Thanks for watching, see you next time.